My name is Rob Furman, Senior Analyst with Catoosa Research. I'm here with Joseph de la Plante, VP of Corporate Development from Osisko Royalties. Joseph, welcome to the VRIC.
Thanks, Rob, for having me.
So, we've survived a really tough bear market. We've come out of it. It's exciting times. Lots of people are here. Why don't you talk a little bit about what Osisko Royalties is and what a royalty is first?
Osisko Gold Royalties is actually the newest intermediate gold royalty in the sector. Some of you might recognize the name. Osisko was born from the sale of Osisko Mining Corporation to Yamana Gold and Agnico Eagle in 2014.
Right.
Osisko Mining was responsible for the discovery and construction of the Canadian Malartic gold mine, which is now one of the largest gold mines in Canada. Through that sale, Osisko Gold Royalties was created, and we kept a very large royalty, a 5% NSR royalty on that Canadian Malartic mine, and we used that as the basis to start a new royalty company.
So that was a really big acquisition. That sort of, everybody thought that might have been the turn at the bottom of the market. It was like a $1.4 billion acquisition?
It was actually a $4.3 billion
Wow.
acquisition. So $1.4 billion is the amount that we spent on the property, and
Right.
then we sold it for that much larger amount.
That's substantial, okay. And so you've brought your whole technical team from Osisko into the new company?
Correct. So that's one of the unique features about our company, is that our team actually has done discoveries, has built mines, and they are still with us today. So we use them and deploy them into some of the opportunities that we're looking at to drive value for our shareholders.
Right. And so last year, we were talking beforehand, you said you did 38,000 ounces of gold?
Correct. So that's where really the royalty model is powerful.
Right. Because it didn't cost you anything to actually do
Exactly.
that per se,
So
right?
2016, over 38,000 ounces of zero cost ounces for Osisko, all from our Canadian properties. And we do that with just a team of about 20 employees, including our receptionist. So
your revenue per ounce, your cash cost per ounce there is quite low.
very high margin, very high margin, yeah.
That's interesting. And so I guess when you think about a royalty stream, how long is this going to go for before the ounces run out per se? For people who don't know Elenoria, it's one of the biggest mines in Canada.
Certainly in Canada, certainly in the world.
Yeah.
That's, again, the unique feature of royalties, is that they are perpetual contracts. So definitely will cover the life of mine for the ounces that we know of today. And any additional upside to that reserve base will be covered under our royalty. So these royalties that we have can go for a very, very long time.
That's exciting. And so let's talk a bit about what's next for Osisko. Are you looking at new deals? There's a lot of deal flows. There's a lot of buzz around the conference. What can you tell me about your next steps?
Well, Osisko is actually very well positioned for growth. Where we sit today, we have $500 million in cash on the balance sheet, which we are actively looking to deploy into new opportunities. We're certainly on the hunt for another large cash flowing precious metal royalty to add to our portfolio.
Has to be precious metals?
We're precious metal focused,
Okay.
so we've always said at least 80% precious metals.
Right.
In terms of that next cornerstone asset, it will be precious metals. In addition to that, we are also spending a lot of time deploying our efforts and our capital and our team into earlier stage opportunities in what we call our accelerator model,
Okay.
which is where we go into early stage opportunities. And we,
How early? Like at a drill stage, or will they have a 43-101?
we will go
Okay.
to the drill stage.
Wow, that is early. Okay.
And we'll partner with a junior company, buy a royalty, put members of our team into that company, buy equity into that company, and use our team and our expertise to drive value on the royalties that we've acquired.
That's
in
exciting.
the hopes of one day converting those early stage royalties into cash flowing royalties for Osisko.
Interesting. Is there a jurisdiction that Osisko wouldn't go to per se for risk reasons? Let's say, would you go to the Congo? Would you not?
Well,
or
maybe
South
I'll answer
America?
the opposite question. We're
Okay.
focused on Canada.
Canada only?
And mostly
Okay.
the Americas in general. We have a few royalties in the United States, but if you look at our portfolio, it's dominantly Canada, dominantly precious metals.
Right. So when will new ounces be added to the portfolio in terms of your production profile? So are new mines coming online soon? When can we expect that big bump in cash flow?
So if you look at our royalty profile, essentially, so we produced 38,000 ounces last year.
Yeah.
If you look at our two key assets, there's already growth within those assets themselves. So at Canadian Malartic, they're drilling, for example, targets near the pit. We expect them to come out with new resources on those targets as soon as Q1 or Q2 this year. On Eleanor, that's the mine that's in ramp up. They're expected to produce 315,000 ounces next year, and we expect that to go up to 500,000 ounces over the course of the next 4 or 5 years. So there's growth just within the existing portfolio, and then there's growth within the earlier stage opportunities that we're looking at.
That's exciting. A lot of organic growth is important. It means you don't have to redeploy that $500 million until you want to, and you can snap
until
up an
we find
asset.
the right opportunity, exactly.
Right. Let's talk about the early stage stuff. Where are they? Are they in Canada, the US?
Yeah, again, it's mostly Canada. A lot of them focused on Quebec. Maybe just to highlight a couple, we have a royalty on the Windfall deposit, which is currently being drilled by one of our subsidiaries, Osisko Mining. We own 20% of the company. The company is being run by one of the founders of Osisko, John Brzezinski, and his team. They're doing a fantastic job. They're essentially drilling 250,000 meters in 2017 on this deposit. We expect there to be a lot of upside on that deposit, so we're very excited about that.
Right.
We also have a royalty on Barkerville Gold Mines, 1.5% NSR. They're also drilling over 100,000 meters this year. So there's lots happening on our royalty properties.
That's
in
exciting.
fact, as you look across the portfolio, an interesting statistic, there's over 800,000 meters of drilling on our royalty properties in 2017.
That's substantial.
It's a large amount of drilling, and the shareholders of Osisko will benefit from all that upside, and we don't necessarily have to participate in any of the costs of that exploration. So it's a very powerful model.
That is a powerful model. Do you notice, because you have several competitors, Franco-Nevada, Silver Wheaton, those types of companies, do you notice that you have to compete with them? Are you guys bidding on the same types of assets ever?
Yeah, it's a very competitive space at this point in time. There's certainly a lot of competition in terms of the deals that we look at. I think we're positioned uniquely, first of all, because of our size. So for them to do transactions that are impactful, they'll look at much larger transactions. We're in a very interesting bracket right now where we can look at specific transactions that are impactful to us, but not necessarily as impactful to our competitors. So there's a unique positioning there. We're also uniquely positioned because we create our own opportunities within our accelerator model. So that's really one of the highlights of this company, is we're able to create our own opportunities.
Very exciting stuff. Well, I look forward to following the news flow, and have a great rest of 2017.
Thank you very much.